Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the third day of October 2014, and this is the daily report for gold and silver. We have a virtual meltdown in the precious metals markets, with the entire complex trading dramatically lower. In the case of platinum, off about 3% on the day, gold off almost 2%, silver off almost 1.5%. First to gold, it breaks through 1200 and does it with a vengeance, currently trading 1190.81. We have had a high today of 1290 and a low of 1190, so we are on the lows of the day, with this market getting ready to close in about 46 minutes from the time of this recording. Silver also trading dramatically lower, off about 25 cents on the day, or 1.49% lower. Current print on the screen, 1683, yes, back below 17. High 1715, low 1673. More on silver towards the end of the show. Of course, the big news today is a very favorable jobs report, taking the unemployment rate, I believe, for the first time in quite some time, below 6%, 5.9%. We can see that in the Standard & Poor's, of course. We're back over 17,000 on the Dow. This, of course, Standard & Poor's Mini. We really saw this market, in terms of its upward momentum, really get a little top heavy after it just went over 2,000 mark being right here. You can really see this rounded top in the Standard & Poor's. Market comes down. Here's our low right here of about 1920. You're getting this very, very long-legged tail and a doji-like candle on a daily chart in between the red and the green. Of course, traders that have been with me for a while recognize this pattern very, very quickly as a three-river morning star. It's one of those pivotal candles that we look for as we look to see if the market is going to find a pivot point, support, and recuperate. We can look at past performance in terms of what we have seen. In this case here, you get an engulfing bullish. If we take it down, for example, here you get a piercing line. It's almost an engulfing bullish, but a very, very strong piercing line. This particular move right here in February is a little bit more difficult to read, of course, because you have inside trading day, which is basically called a harami. You then get this doji, and then that's followed by these long spikes up. What you have to do in a case like this is in essence put these candles together to see what they would form. And when you do that, you basically still get a bullish harami with a confirmation. So we do get pretty clear-cut signals in terms of looking at the Standard & Poor's through candlesticks and the other techniques that we use. Dollar, a runaway freight train, no doubt about that. This is a weekly chart. The daily chart is just as impressive. But the reason I've got this weekly chart up is when we look historically to look for any kind of technical evidence that we could look for a level of resistance, it really doesn't come into the marketplace until 89. We're trading at 88.78. Of course, that has exceeded these two prior tops right here. This being back in October of 2013, July of 2013, this top here, we have absolutely taken them out. But what is most interesting about the dollar is the angle in which it has been taking off. In other words, it's almost a linear straight up move. We've gotten that before in the dollar. It tends to track when it goes into a basic pivotal point, meaning it is moving to higher grounds. It's hit a pivotal point. In this case, it was really coming out of a sideways market, or a market defined by a narrow range, I should say, and then just took off and hasn't really looked back since. Now, what has that done to the precious metal? Well, traders, as you know, I have been extremely bearish on this market ever since it began to break through some key points, 1260, 1281. Those were areas of concern. 81 especially, because you had this bottom here once it broke through the bottom, this being at around 1231. And so as this market went down, we have taken a couple of stabs. Of course, we got short initially at 49, but trailing our stops up, it knocked us out at 31 or 32. We were very fortunate this week when we put in a price order 2 days ago to sell the market at 12.21. The high was 22 to 24. So it just came in, it filled our position, and the rest is history. Of course, we had distance on that ever since that position was put on, and that's what I like. In other words, it came in, initiated the short position, and then started tracking lower through the evening session. That, of course, is my reference point here in Hawaii as it opened up. In New York, it continued under pressure, this being yesterday's candle here. But of course, once that job reports came in, boom, we really saw that market move. Now, what does that mean? And this is really what I'm looking at. And let me go ahead and compress this chart a little bit so I can have you make some sense out of it. It's a 2-day chart, and I'm really trying to look at the similarities that we have seen in the market on this particular sell-off, which roughly was when we hit the record top at 1920. And what we had is at one point we had a triple top, there's no doubt. Then we went into this pattern here where we had a period of descending tops, lower highs, lower highs, lower highs with lower lows. And the key to me back then was this support line, because on 1, 2, and 3 occasions, we hit this level, it was supportive, and it would bounce back up. Here it bounced back up, and of course, here it bounced back up. So when the market moved back down, to me, this was that really critical point we had to look at. If it broke through, it was signaling a major, major move to lower prices. If it found support, though, we could see a spike up, and we could have, in essence, on a technical basis, ended the correction. In essence, the way I've looked at it, and my long-term subscribers know this because they were with me during this period, I was looking at these series of tops moving down. I was looking at this as our basic retracement, however you want to count it, but what we had was a descending top. We had a flat bottom. As this market came down, I was looking for 5 waves, and then a breakout on this 5th wave signals a top. It was my take then, and it still remains, that once we were really unable to take out this now being a triple top here and started to move to lower grounds, we really had to see how it was going to react at this defined support level. And once we broke through it, we knew we were in store for major sell-off and drastically lower pricing. Now, I draw your attention to the fact that I think we have a similar scenario transpiring right now. As you know, I have been calling for this market to, in essence, run back down and retest these lows at 1180. I've been on record for about the last month, month and a half, believing that we would see that happen. Now, what happens after that? Should the market come down, touch this, and bounce up, I think it's probably going to remain within this channel here. However, if we get this market breaking below that point, and that's what I believe is absolutely could be dramatically significant. If we see the market break below supported at 1180, we now have, in effect, a triple bottom. But if it breaks through here, really, according to my charts, the next real level we'd have to see it go to is about 1143. 1143 is a pretty interesting number, and it's really based upon the work that you see here. This, of course, is a weekly chart. It has 2 long-term fib retracements, one starting from about the first quarter of 2004 up to the record top, and then the secondary one starts at around 700, 674, again going up to the record top. And the reason we picked this spot right here is after having a defined move up, it hits just at about $1,000, sustains that, but then corrects back to below 700. We had a 30% retracement of this move, and this begins the second component of the rally. Now, as you know, I look for fib harmonics. The fib harmonic that I'm seeing here, 1143, a 50% retracement of this large move from 2004, and a 61% retracement takes us to 1149, and that's of this last recent rally. So the way I'm basically looking at our current count is something like 1, 2, 3. This is all part of 4 because it's a compression triangle, and I really believe that wave 5 is going to take us, if we break through the one triple bottom at 1180, we're going to 1143. The next real major level and of course I mean severely major level, is this other double harmonics, and that's the 61% retracement level just below 1,000 and the 76% retracement level roughly at the same component. So traders, where are we at? Well, we're at a critical area trading at 1191. We haven't effectively now come into the fact that we are in essence forming a triple bottom in the market. The real question is, will the market be able to sustain any kind of support in this area now that we're really in this area to form this triple bottom and bounce back up, or will we break below that? Now, in terms of the fundamentals in the market, and of course anything can change on a dime in a moment's notice, but all things being equal, my sense is we probably will break through 1180 at this point and possibly go and test approximately 1140 to 1150 in gold. So traders, what about silver? As you know, I have not been actively promoting silver in terms of going short when we went short gold. I just thought that there was better value in terms of dollars invested and dollars returned, and more importantly, liquidity within the market. Silver tends to trade so thinly at points that you really don't get in or out at the points in which the screen is showing you the tremendous spread in the market. Now, I talked about the fact that we had a major support area, and I based it really upon these lows right in here before the market really spikes up. We broke through that, and we broke through that in a vengeance. So where's the next real area that we're looking for silver to go? Well, under the assumption that we see gold remain under pressure, this is a simple horizontal line, but if you look at historically speaking, you can see that it was supportive in this area. Here we find it as a resistance area. It hits that top. Here it becomes a supportive area once again right down here. So there's some good technical data behind how the market acts at $16 per ounce. My sense is that that is where silver is currently headed, $16 an ounce. $16 an ounce, excuse me. This has been Gary Wagner wishing you as always good trading. We certainly got that this week. We will talk to you on Monday for another daily update and review. Bye-bye.